Greetings, this is Jeff Scott, and welcome to this week's top-down review. For those that are new, I hope you enjoy this. If you get confused by the vocabulary, send me a note and I'll show you where in a second, and I will send you a vocabulary document and video. It's simple, blue and green are good, red is bad. For those that are back, I'm glad to have you. I had a lot of questions come in over the last couple of weeks. Where's my mailing list? I don't have a mailing list. I have nothing to sell you, so why would I bother having a mailing list? Because it would create work with no gain. I've had comments come in about the video quality last week. I apologize for that. I can assure you I recorded it in 4K and it was perfect on my computer. The problem was that eBay must have had a backlog because it took forever for them to fully process it. Now, I just want to show everybody something. Since I don't have a mailing list, you're finding this by either one, you are an Hgsi subscriber and you get an email from me that says that I put a new video up, or you might find this because you do a search in YouTube and if a miracle happened, it would show up on your list because you've watched stock things before. But I don't really think that happens very often. If you go to YouTube to look at this, I want to show you something. If you go to YouTube, here it is. You'll see my video. Here, this is the one from last week. And I was correct. We certainly did kick off a market rally, especially on Monday. Now, you'll notice on the website, there's a thing here that says show more. If you click on show more, you see my little thoughts on the market, but right here is a way to download the 4K video. It's typically 1.5 gigs, sometimes more, sometimes less. Now, when I upload to YouTube, they will ultimately process it in 4K. You have to go to this gear here, hit your left button, and you'll pop it up here where it says quality, and you can go here and you can take it to the highest quality that your machine has. So I'd highly recommend you do that. And then I welcome comments, discussions underneath. The other way to reach out to me is to go through my email at hgsidoc@gmail.com. I've been doing this for 20 years. I do it, let me tell you a secret, I do it for me, not for you. I'm just recording my thoughts as I do my market prep on the weekend, and I find that it holds me accountable to what I think. And I trade better because it helps to build my plan for the week, and then it's something I could go back and verify as the week goes on. So I titled today, is this the year we should sell Rosh Hashanah and maybe buy Yom Kippur? That's one of the things like sell in May and go away. Think about it, I'm Jewish, so when I make a Jewish comment, it's out of respect and participation. There's a lot of Jews on Wall Street, and the two holiest holidays in our calendar are Rosh Hashanah, which is the Jewish New Year, and Yom Kippur, that's the Day of Atonement. They're like 8 days apart. Remember, our holidays start the night before and end at sundown the next day, or in the case of Rosh Hashanah, for many Jews, the second day. A lot of folks on Wall Street are Jewish. There's actually a very large hedge fund contingent of very Orthodox, strict Jews. So they're not going to be participating no one's participating on Monday because it's Labor Day. Tuesday and Wednesday could have lighter volume. And then I think next week it's Tuesday night and Wednesday. I'd have to go look at my calendar. My calendar in living color is my wife. She tells me what I'm doing. There's an old adage that you sell Rosh Hashanah, and I think if you look historically, there's as much as a 2% drop in the market between Rosh Hashanah and Yom Kippur, and then you get to rally from there. So we'll see if that actually happens this year. As always, this is for educational purposes only. I am a doctor, not a broker. I have an MD, I have a fellowship, a residency, but I don't have a Series 7 or any other license that would say I should tell you what to buy or sell or would be responsible. I am independent. I don't work for any software companies, Anything I demonstrate are those that I use in my daily trading. Trading involves risk, and you alone are solely responsible for any investment decisions you make. Should I go and demonstrate options analysis? It's how I approach options. I may not be the same as others approach options. To me, it's a stock replacement tool and a way to create income. But options are risky, and I refer you to the Options Industry Council for additional knowledge. Not to spend any time here to say, except to say, I learn from a lot of smart people, many of which are here. There's even more that are not on here. And I call my learning, and when I have time to teach people, I call it be your own guru. Get exposed to smart people, learn from them, but then make it your own. And since none of us have a marketing brand, where we have to stick to our own stuff, except for maybe Sagar, but he keeps growing his stuff. Love what he does with superior profit. We can use everybody's and meld it to the way that works for us. And I certainly do. I have a lot of technology on my computer, a lot of different programs. And if you see me during the day, you'll see TradeStation, Thinkorswim. You're also going to see wealth charts. And these things have gone way too long. Maybe I can get Rob Hoffman, who does wealth charts, to do a video with me. I think it's a awesome platform. It's a platform. It's got a lot of things built in, but you have to, there's upgrades with other educator stuff to put in there. Look for the Wealth 365 event, because trust me, you only want to buy wealth charts during a Wealth 365 event. He gives it away extremely cheap during that week of education. I have HGSI as my analysis tool. You'll see that a lot today. EdgeRater supplements it. And then within TradeStation, I'll have John Person's indicator sets, Dr. K's tools, of which he has some new ones. I should be talking to him shortly so we can see if there's opportunity for another presentation and discount to the people that watch me. And then, Sagar's awesome Q tools. I bring you people who I think are smart and whose stuff I use, but I never get paid for that. I don't get paid if you buy something. I don't take an affiliate fee. I don't need it. Why would I want to take it? So I'm purely an unpaid volunteer, and this is just education. Speaking of unpaid volunteer, I've been helping HGSI for since it started. Here's the website, highgrowstock.com. Free 30-day trial. If you take the trial, let me know. Let them know you heard about it from me, but let me know, and I will send you some videos of how I use the program. Under investing strategies, you'll find this video today, as well as hundreds from me, Ron Brown, and others. Let me just make a comment about Ron Brown. Ron and I trade with different strategies and different techniques, but we both trade using HGSI. And I follow Ron. I've done his courses. He's a volume spread analysis person. Showing the power of HGSI, Ron worked with the proprietor George and programmer Matt of HGSI and built in one of the best volume spread or volume price analysis products in the market inside HGSI. And unlike things sold by people in England and other parts of the world, they don't charge you $10,000 extra for it, built in to HGSI. Stock patterns are cyclical, and what did I say last week? I said last week, so a week ago, Thursday felt like the market was rolling over, and a week ago, Friday felt like we had a new leg up. I thought we'd have a new leg up this week, and we had a new leg up this week. At least we did on Monday. Then we sort of went pitter-patter sideways the rest of the week. But within that market, the rotation favored growth stocks. We'll show you some data to support that. Remember, stocks that I trade, stocks that you trade, if you're like me, they go up like rockets, but they fall like rocks. If this market takes a dive and drops 7 to 10%, the stocks that we trade will drop 30 to 40%. You cannot afford to sit on your hands if the market becomes bearish. The problem with the bearish market is you don't know when it's going to stop. If you tell me we're going to have a 3 to 5% correction, I'm totally good with sitting on my hands, buying a couple of contra ETFs, and riding it out. Now, mind you, I've got a lot of puts on my positions already. If it was a 7 to 10% correction, I probably want to raise a lot of cash and take profits on my puts. And if it's a 20% correction, I'm going to get hurt really bad. So I'm going to be out of the market. We're going to get a correction. Whether the correction occurs in September or October, whether it waits to the middle of January, we are overdue a correction. That said, you'll see some long-term charts today that blew my mind. So I have to watch this closely. If you ask me, are we going up this week? Well, all my signals say we're going higher, except the sell Rosh Hashanah, which I pay attention to. And, we're not at the top of our trend lines. We're not horribly extended. Breadth kind of sort of improved a little bit this week. Arguments that we might go higher. But we all know we're in September or October. We're overdue a correction. So I have to be aware of that. But again, a 3 to 5% pullback is normal and not something that should kill your portfolio. Since we're living in that uncertainty, I should have raised cash, which I did a little bit last week. Smaller positions, I really went in big Friday before last week. And so I peeled off a couple of things. I'm probably overbought right now, but as we went into the weekend, I did buy a bunch of Contras just in case the market gaps down Tuesday. I don't think it will, and I'll be probably covering my hedges. I bought them as hedges. I didn't buy them because I want to make a ton of money being short. I'm not short in all-time highs that have not rolled over yet. But I bought them in case the market takes a dive before I have a chance to get out. I know last year in 2020 in February, March, I saved my bacon with FAZ and a couple of the other Contras. But I'm not in save my bacon mode right now. I'm more in light hedges in case the market goes against me. Speaking of the market, this is Friday. Friday was not a great day, except for growth stocks, as we'll show you. And you could see here, forget the tickers. You don't need to see the tickers. This starting here, this is materials, and this is energy, and this is financials, industrials, and staples, and technology, discretionary, utilities, healthcare, communications, and REITs. I see more red than green. I see that in materials, they're almost all red. In energy, they're almost all red. In financials, they're almost all red. In utilities, interestingly defensive, all red. It was a red day. The Nasdaq had a good day though, which again, we'll show you in growth. Take a look at the major markets. For this, I'll go into Thinkorswim and I'll look at live charts. It's Sunday and a holiday weekend. I don't think we will have had any futures trading yet, so we should pretty much be at end of week. So this is the E-minis. I like the E-minis because it eliminates gaps. And you could see as I run up here the various different fib retracement levels here. And the reason why I have them is just to remind me that this market has stalled at several of the levels and went sideways, and then they broke out. And this has got to be our next target level up here. That's still pretty far away. But at some point, this extension is going to become a problem. Now, I don't know if this is going to work. I'm going to try out on this the magnifiers. Hopefully it doesn't ruin everything. But you could see here that this is 100% extension at 46.2658 off of the March 23rd low on the S&P futures. So that is where you double, and this is on the futures, and you can see we're about 73 points away from that. At some point, we got to say it's a bridge too far, and this market will pull back. But my God, look at this run. Look at this run. Yes, to my friend in Old Palm, when you get runs like this, it's good to have too many positions. When the market does this, if you have too many positions, you die. We got to be careful at this point. Nasdaq Futures. Similar, run up. Now it ran up out of the chute, pulled back, ran up, pulled back. It's running up now. If this follows the pattern, it's probably due a pullback to the 17 soon. But you got to look at back to the S&P futures. You notice a little bubble here, all-time highs. Closed near the high, all-time highs. I guess it was off a little bit. It's the weekly. Okay. I was questioning myself for a second because I know that we were down on Friday, and why was it looking like it's at the top? Because we weren't down a lot. So let me just get back to the daily. I do that all the time. The story is going to be the same, just you won't see as far back to the left. So the E-mini futures, here's that straight line. You had a red bar on Friday. It was actually up for part of the day. It's got a flag here for a new all-time high. All-time closing high was on Thursday. What a great looking chart. And the neat thing is it's kind of running up in a gradual enough ascent that it's not as stretched as it could be if it was going straight up from that 200. Is it extended? Absolutely, it's extended. But it's running right up to 17 and the 50. So do I think we got pullback in the 50 in our future? Sure, why not? We had it here, all the way up. We've had pullbacks to the 50. Why don't we get one this week? Maybe we will. The Nasdaq Futures, a similar story. You could see it, one of those fib retracements right here. The Nasdaq went sideways. It went sideways here. It broke out. It set all-time highs on Friday. Nasdaq was up. Only one of the major index up on Friday. Dow Futures, a little bit different in that the Dow Futures have mostly been going sideways with an upward tilt ever since this pullback here in May. Did set its all-time highs back here in June. Or is that August? I can't even see. In August. So not that far off its all-time highs. And although it's slowed down and gone sideways, pulled back to the 17, certainly not broken as of right now. The Russell last week, it had a massively good week. You could see it pull back to the 200, and as predicted, as it did here, it had a massive rally up 1, 2, 3, 4, 5 days. This week, 1, 2, 3, 4, 5. It moved up some, but pretty much sort of consolidating the gains of the prior week. Now, do any of these look outwardly bearish? You got to say no, because they're all moving up. You've had little pullbacks along the way. And like the Dow, except more extended going back to February, the Russell's been mostly sideways, with its all-time high and high of the year occurring in March. If the markets are strong, the VIX was probably weak, and you could see a couple, maybe 10, 11, I guess this is probably that Thursday. 11 trading days or so, it peaked, hit the 200, came right back down. Positive day a little bit on Friday, no big deal. I'll be watching the VIX. And then the dollar, remember I said there's a relationship between the dollar, in my mind, and small caps, and a weak dollar seems to help small caps. And at least on the daily, you could see that the dollar has been pulling back. Now, we got a big bottoming tail there. Does that mean we got a dollar bounce coming? If we're pulling back in the market, it would not surprise me to see the dollar get stronger. I said if we're pulling back in the market. I don't have a crystal ball. I just have to look and anticipate. And I know we're at that point where the risk is there. I don't know for sure we're going to pull back. No one does. Only the liars and the people that record this after the market. And they already know what the market did. So the S&P, you could see all-time highs this week. Beautiful run up. It's getting a long ways from its 200-day moving average. But boy, what a beautiful sight the weeklies are. Well, 200 is a 1,000-day moving average. The Nasdaq, similar, closing all-time highs. The Dow, 1, 2, 3, 4 weeks of nothing. A month of sideways motion. The people that made money are the market makers selling straddles at the money. Russell futures, after pulling back some, broke out above their weekly 17 weekly or 50-day moving average. Looks pretty good there. And again, the VIX is low, and the dollar, even when it was running up in the lower right-hand corner, you have to look at the weekly to put it into perspective, where the dollar is, it's weak. Or it's come off its highs, I guess is a better way of putting it. Let me switch this back to daily, so when I do my own stuff, I don't mess myself up. Other thing I like to look at, I like to look at that expected move, and then I like to look at some long-term charts with some linear regression channels. Very quickly, I think you're going to see the same pattern here. S&P sideways, did not go outside the expected move. The expected move for next week is written already, and that's based upon Friday's close. 80% or so of the time, the market will trade within this. And you can see 1 week, 2 week, 3 weeks ago it traded below it, but it finished almost unchanged. 4 weeks, 5 weeks, 6 weeks, 7 weeks, 8 weeks, 9 weeks, 10 weeks. Last 10 weeks, the S&P has traded within its expected move or closed at the edge. That means the option maker selling a straddle at the money made money, and they're going to make money more often than not. And they're the smart money, and they're telling you what range you might see this week. You can then use that to your favor. Nothing happened to the S&P. If we look at the Nasdaq, you know, I wasn't surprised that the Nasdaq was up, but you notice it stopped at the expected move. You look at the Dow, did absolutely nothing this week, traded the midline where it opened. You look at the Russell, had a very positive week. Now this week it was confined and closed just above where it opened, but look at the prior week where it had a massive move up, and the week before that a massive week down. When 80% of the time it stays within the red and the green, and you got 2 weeks in a row, maybe that's telling us the Russell's done going down and it's going to start moving up. Maybe there's a change. Be interesting to see that. And that gets us back to the VIX, stayed within its move, as did the dollar. How do I use this? How does this help me in trading? Here's how it helps me in trading. When you saw this a couple weeks ago, and you saw them very quickly drop below the expected move, you should have been looking for a reversal. Now, this reversal almost got us back in the range. This was a tradable event. Now, this happened to be the Thursday I referred to as 2 weeks ago. I guess now 3 weeks ago, a little bit over 2 weeks ago, the Friday reversal, and then we had 2 good weeks in a row on the Russell 2000. So it gives you clues of opportunities when you might want to play a reversal. The other thing I like to look at, and I used to do this on my own, and a couple weeks ago it was just so obvious I decided to show it here, and that you buy support and you sell resistance. We're getting there, but we're not at resistance. Now you notice that a lot of times we reverse from the center, so we're at an area where reversal has occurred before. That's the spiders. Here's the Qs. Again, when you pull back here, that was sort of a signal. Here is the Dow. I forgot to extend this to the right. Let me do that right now. Still within its linear regression channel. And, you know, I guess it doesn't go from machine to machine. And here is the Dow. Excuse me, the Russells. You know, this thing has reversed here 1, 2, 3, 4, 5, 6 times. I might look at buying some puts on the Russell this week if it doesn't break out of that very quickly, because it's in a Darvas box. So we're getting at the top part more of an area where you'd expect a reversal, although not where it has to happen because we're touching the line. All right, back to the PowerPoint. Although I use a lot of slides, I make all this stuff after the market closed on Friday, so it's the same as looking at the charts. Underneath, rates trickled up. I think the trickle is more important than the word higher. Why? It's because this rapid ascent here is what spooked the market earlier this year and led to a sell-off. I think the market would like to get rates a little bit higher, because below the white lines, I think we feel we get concerned about the economy, and it's not the amount, it's how fast we get there. Rising rates should be good for banks, especially regionals and insurers. Large AD line on the right, all-time high, price of the Russell 1000, all-time high. Can't see it as well. We're not there yet on the Russell 2000, but we have moved up nicely. So the small stocks have improved on their breadth. If I look at the NYSE, we still have to get back to prior highs, but it's moved up for the last couple of weeks. And notice the spiders, the Qs, the diamonds, and now even the IWM are getting back to all-time high territory. So price is leading AD line, but AD line is improving. The one thing that flipped down here is the bonds with rates going higher, and then transports are going sideways. And I guess for us to, if you're a Dow theorist, ultimately this new high on the diamonds or approaching new high of the diamonds needs to have the transports involved to confirm. Breadth, it's mixed. I like to think it's improved some. Stocks above the 200 actually did not improve, but stocks above the 40 did. So short-term an improvement. And if we look here during the week, here was last week's 12-week new high, new low. It shot up and came down. Here, we've improved in our breadth compared to a week ago. So that's positive for the market. The daily McClellan, the problem with the McClellan oscillator in here is that we've had a series of higher highs and a series of lower highs. Now we actually broke the trend line. Now we came right back down. I'd like to see this get back above that trend line and confirm that these negative divergences on the daily and on the weekly, despite higher highs, we break those, I'll be much more bullish on the market. And maybe we're about to do that. Notice on the downside, they've been great predictors of reversals at this yellow line of time for the market to go higher. Buckets, 2/3 of the stocks are above the midline of the S&P. This is despite a weekday on Friday. And if I look here, very few stocks are above or below the Bollinger Bands. So I'll put an X and say no signal. There are no Hindenburg omens on the Nasdaq or the NYSE. And the reason is the number of new lows has basically disappeared as the market has stabilized and started to go back up. Market tone, despite a positive feel of the market, we look at the Woody index, and I just look at this more qualitatively, we still got yellow and green. So it's strong, but it's not totally strong, and you've still got some areas that are lagging. Now, when I looked at my return on the right and I saw that my stocks were up 2.6% for the week, I was pretty happy. And then I saw the IBD 50 was up almost exactly. And boy, is that a change. IBD, this is Mike Scott Focus List, a very smart, him and Lee Tanner put together a list of stocks each week. I like the Focus 3. Here's the Marcus Smith, the IBD Live Watch list. You can see the growth type list in my portfolio, which is heavily growth, did well. The interesting thing here is this is just a mess. This is taking the fundamentals from a week ago and looking how earnings, relative strength ranker group were added together. ERG was related to performance. There's no pattern there. Earnings was actually a negative driver. EPS rank, the more EPS rank, the worse you did, or the least good you did. Interestingly, relative strength rank, which is what you see in growth stocks, was good. Group rank didn't matter. And stocks that were worse the prior week or best the prior week outperformed. So it's kind of a messy week, but something's going on with growth. Sector strength, just like in the markets, here it is. Mixed, strong, all green and yellow, no red, but you actually had some more yellows pop up. So that's not great. If we look at a 5-day, now here's, people go, Jeff, why are they different? This is based upon the S&P 500. Sager's Q Tools expands it to look at the S&P 1500. Well, if this was sitting on your desk on Friday, you'd say, man, all the sectors were negative. Most of the industry groups were negative, and 7 out of every 10 stocks was down. That was a weak day, and it was. And if we look at 5 days, it's a 50-50. And if we look out at a month, it's a little bit more favorable. So we stubbed our toe on Friday. For the week, we had 6 sectors up, 5 down, so mixed. and compare that to 10 days performance in a month, we clearly weakened in the end of the week. Here is a reproduction of the buckets that's done in real time in the Sager Q Edge tool. And you can see on Friday, if you can read that, all in red, all 11 sectors were negative on Friday. If we look at where the strength was in a weak market, it was in real estate, in information technology, and financials. Utes, which had been weak for a while, remain weak. Interestingly, so were communication, which had been strong, and discretionary. To me, this is confusing. I would have expected to see utilities, staples, and real estate act similar. And perhaps utilities were down because of the trickle up in rates. These are the industry groups in the top 2 of the sectors, and then I went and pulled out the stocks there, and then I looked at the top performing by the crown, the most undervalued with good earnings growth, and I looked at them. None of them really came out as good opportune buys. But top-down investing, market, sector, industry group, stock, and pick the best of the stocks. Now, this is something you haven't seen before. And let me just tell you about what this is. So I've been doing I guess it's not even a trial, a trading room on becomeabettertrader.com. Ziad is the guy's name. I got 3 or 4 months when I bought a software package. Too much day trading for me. I'm a swing, and there's this guy, Laurie Jones, who does more my type of trading, swing trading and options. So I've been listening to him. But Ziad was using eSignal a way that I wasn't using it. And what he was doing was he was creating ratio charts of various identifiers of market strength, and then looking at them on a day-to-day basis to see if the market's risk on or risk off. I looked at it and said, there's something I'm doing that's similar, and that's this ARPS TTB triple trender. So the triple trender looks at short, medium, and long-term trending, and compare it, I believe, to the S&P. And the higher the number, the better performers. I say that's an interesting correlation, but this is longer term. This might be good to look at short term. So you can create any ratio that you want. So I created a number of them, and I'm going to probably add to it as the week goes. What I wanted to point out was the strongest group on Friday in a negative day was the IBD 50 ETF. Well, Cloud was even, it was number 2, and Fang was number 3. I'm going to show you more evidence that the IBD 50 ETF, which represents a lot of what you and I probably own, may be breaking out, and how that could be good for us, growth stock investors. Transports, as we looked at, were weak. Europe was weak. Oil, Russell 2000, interestingly. But you can look at various groups compared to the S&P 500 and looking at their returns were. Now I can do the same thing for sectors and see which sectors were leading using this tool. Here's the individual performance of the sectors and then the Fangs. Notice that on the TTB triple trender, the trending tool, all of these have very high 6 scores showing the strength in the market in Fang. Canaries, I've said they were going higher and they have had a nice move. Now they're in a channeling stocks.com mode, and we'll see how far they go. This is their all-time highs. Clearly, and I changed this, I must not have saved it. They're in an uptrend, and we'll see what happens. Now, is canceling back in favor? More ratio charts. What I did is I compared on the left the IBD 50 ETF, and on the right, Fang. So we know that Fang has been doing great off the, frankly, this entire year, Fang has been leading up until, well, off the March 20 low, Fang led until early this year. And then Fang has sort of been going sideways, maybe creating a wedge. And then this blue line is where we're at right now. So Fang, which was doing really well, then pull back. And this is going back, here's 2020, 2019, 2018 when this ETF became available. The IBD 50 is different. All right. The IBD 50 ran up and peaked in March of this year. And while this was running up, the IBD 50 was tanking. The IBD 50 has been lagging this year. Look what happened of late. The IBD 50 has broken out. Now, the other thing that you don't know is the color scheme. This is using a program called Hgsi, and blue is buy, basically, red is sell, and green is sort of neutral. And notice if you look at the Fangs, they've been blue and green the whole time with very little red, while the IBD 50s had a lot of red and very little blue. It's had a series of higher highs the last couple of days that are pretty amazing. Boy, if we retest old highs on IBD 50 ETF, I'm going to go up 50% during that period of time. Cross my fingers. Now, I remember listening to all kinds of remarks by smart guy Chris Katcher, Gil Morales' partner. And he likes to talk about QE Infinity and how they basically have destroyed the bears. And will the markets ever drop? Here is simple charts using Hgsi. Upper left-hand corner, the spiders. Right-hand corner, the Qs. Lower left, the diamonds. Lower right, the Russell. These are not monthly charts. These are quarterly charts. Here is 2009, the bottom. This is when QE started. Every time they pulled it back, we had little tantrums. Does this look normal to you? Does this look normal to you, thinking of markets going back? Or does this look normal to you? I would make the argument that we are not living in normal times and that things like markets have to correct, that you have to have bear markets. Markets always go down. That's not true anymore. Do you see any red on this chart, any of these indexes, since 2010? I don't. And why don't you? It's because no quarter rolled over. And that when you had rolling over here, in real time we had some red. And I remember people that follow this methodology were saying, finally, we've got a red bar. But the red bar went away before the quarter closed. Here's the last red bar. Even though I think we have a correction coming, even though we're overdue, even though we're in a bad time of the year, and so on and so forth, you would have made more money never looking at charts, just buying long ETFs in 2009 and forgetting about the market. Funny story. Got a guy who used to work for me. His initials are JD. JD came to me in 2009, said, I got some extra money. What should I do with it? I said, buy TNA and buy the Qs. I think he's still in them. All the work I do, and he's probably outperformed me because he was in leverage ETFs. So we're living in an altered reality. My wife tells me that all the time. News this week, light. We do have some jobless claims. That will be important. The JOLTS job openings on Wednesday. As we said, Labor Day on Monday. And we're nearing the end of this earnings season. We got some big ones that matter, though. Coupa is a software company. They've been down some. GameStop, for anybody here that's a Reddit fan, which probably doesn't exist in my world. Restoration Hardware, Copart. I'll have to decide what to do with mine. Zscaler, one of the darlings. So it's not without some news risk here. Judgment call to hold stocks over earnings dates, bad judgment to not know when your stock's earnings date is scheduled. So thoughts, market ended September on a quiet note, started September on a quiet note after ending August equally quiet. S&P was up 0.6, Nasdaq 1.6, Dow lagged. Most of the gains occurred on Monday. IBD 50 was up over 5%. If this is maintained, it'll be positive for those trading high growth stocks. We have Labor Day on Monday, relatively slow news week. Likely continue to digest news to see whether it's going to impact on the Fed from a tightening or reduction of easing. I guess they're trying to make sure we understand that reducing QE is not tightening. COVID, Delta. I went to Michigan. I watched on TV at 109,000 of my brother Michigan folks were there, mostly without masks. We saw that in Clemson at Charlotte at the Clemson game as well. Will that impact on COVID? I had a great week last week. I'm up over 50% of the year. I did take some heat in early August. You probably did as well. I'd rather figure out how to avoid taking heat, but I like my returns and I'm happy with that. What do we do now? In light of QE, as I said, some of these old standards might not matter, but it is September, it is Rosh Hashanah, and I did add some hedges. But some of these people calling for a correction have been doing it for 15 months, so you got to take it with a grain of salt. But, this is not normal markets. Markets don't normally go straight up. And if you look at the performance to date, and we're at, I guess, we're a little bit over 2/3 of the year in. These are massive performances if we end the year right now. So I've already gone a long time. These are getting longer as I get older, not shorter. Very quickly, I like to look at TradeStation for a number of things. And one of the things I like to look at is to get a sense of the major markets. So I always start with the E-mini. I look at 6 or 7 things. John Person buy signal, that's great. Buy on the weekly, buy on the monthly. Check that as a positive. A blue bar here and here. So blue is indecision. That's a little bit concerning, but not necessarily bad. It's up at the top of the envelope, which is not a big deal because it has a tendency to ride it up. So that's neutral there. I don't like this red dot here. The red dot shows, we're getting higher highs on the weekly, and that MACD histogram can barely even turn positive. These always resolve with a pullback, but it can take a long time for that to happen. I look at the high jump, it's at 70%. I've got room there. The weekly bond goes green. So I look at this and say, we've had a long run. We're probably due somewhat of a pullback just to the midline here, which is not a big pullback. Trade the market you got right now. It still says it's okay to be long. If I look at the Dow, which had a negative day on Friday, you can see it's got a sell signal here on the longer weekly and monthly. It's a buy. It's got the blue here. It had the red dots, which worked off. It's at 41% on the high jump. Still green bongo. I don't think the Dow looks bad. It's not as strong as the S&P. Let's look at the Russell. Russell looks great, and this was the laggard. It's up at the top of its channel. A new buy on the weekly. It's a buy on the monthly. Blue. No red dots. Interesting, the weekly bongo hasn't flipped yet. The Russell looks great, but, it's had a tendency to reverse when it gets up to here in the Darvas box. That's something to think about here. You can see the sideways move. And then the Nasdaq, the one that was up on Friday, these are signs that it's probably going to pull back soon. These are some MACD divergence. You're still in a buy signal, 78% on the high jump. We'll see where this goes. Getting extended. Then if I go down and look at the dollar real quick. I know it's here. Oh my goodness. I'm looking in grains. No wonder I'm not going to see it there. Problem I have is the way I'm doing this on a big screen, which is far away from where I'm sitting, but this is the easiest way for me to do it. You can see a sell signal came in at the top of the envelope. We still got red bars, a sell on the weekly, longer term monthlies in a buy. We did have a big tail on Friday. Maybe a bounce is near. Dollar right now is weak, which is probably why small caps have done so well. Now let's jump into Hgsi. We'll go into Major Markets Plus. Major Markets Plus is here which is Market Analysis User Groups, which is a standard Major Markets Plus there. Now I'm going to hit Warehouse. I hit Warehouse View and I list these major indexes. I go to Top-Down View, which is a price and volume story, and I rank it by raw combo, and I could see the leadership for last week. Natural gas, silver, gold. That's interesting, isn't it? Bitcoin, gold. Then we got some ARK, Nasdaq. Here's that IBD 50, 5.4%. All right, let's find the S&P. I think it's down here somewhere. Let's open that up. Let's take a look at some charts. All right, so the first thing I noticed, and we're going to be very quick on these, big long-term uptrend. We're up near the top of the high jump bar, but not at the top. When I see these red candle highs at the high jump, I get a little bit concerned. Again, we're going to pull back someday. We just haven't started yet. Here's your chandelier stop all the way down here. I think a pullback to the 50 would be healthy. Maybe not to my portfolio short term, but long term would be healthy. Dow Jones Industrials, very sideways for quite some time. I think we already know, I didn't want that one, I wanted this one. Very sideways, which we showed you. It's sideways, it's neutral. If I look at the Russell, why does he look so much at the markets? Because the markets are going to tell you if you're going to make money. It doesn't matter what stocks you buy. Yeah, it does matter, but if the markets are bad, does it really matter? If the markets are up 10% on Monday because, I don't know what would cause that, because China decided to become a democracy, every stock would be up. It's the market that matters. Here's the Russell bouncing off support. Nice run up, still looks fine. The problem with the Russell is it's in this box. All right, it's in this box. Let me make the Russell give me a little bit more. The Russell. It's been living in here for a while. Now, that said, it's not at the top of the box yet, so the Russell could still move up a little bit, but I'm going to watch this. This is different than what I showed you before, which were futures. And then the Nasdaq, like the S&P, all-time highs. What's not to love except you're getting extended by the high jump. All right, now underneath this, I like to look at a couple things. Here's just the IBD 50 ETF, and you could see it clearly. I mean, I'm not the biggest trend line guy just because I suck at making them. But I could have drawn a trend line here to the most recent high, a breakout. I mean, there's a bunch of trend lines you could have written. This is an important breakout. Now, will it break out and retest? That certainly is possible. But boy, you got to love what's going on here with the IBD 50 ETF. That's the strength in the market right now. I listened to a lot of stuff on the IBD 50 board, on the IBD board rather, on various IBD boards. And people were starting to question whether CanSlim worked anymore. And I knew that was a buying sign. CanSlim does not always work. This is the inception of this IBD 50 ETF. It worked. It didn't work. It worked. It did sideways. It didn't work. It worked great into March of 2020, stopped working, and now it's working again. I mean, CanSlim as a investing style is on again and off again, just like any other investing styles. But when it runs, it can run a long way. Right now, it's running. If I look at the Fangs, not as strong. In fact, sideways up here, but clearly have had a long way off their lows. off support. We'll see if it finds support on the 8-day here and moves up further. I still think the Fangs look fine. Biotech had been doing well. It was weaker on Friday. At least some of the ETFs were, but you could see it had a bottoming tail and then came right back up and closed near its recent highs. I'm in LABU instead of individual biotechs for the most part because I have non-disclosures because of my day job. And then the Philadelphia Semiconductor Index. I mean, it's moved up steadily, but with more of a sideways move. Looks like it's getting ready to run again as well. If we look at Bitcoin, you know, we talked about buying it down here. I think being long Bitcoin still makes sense. Mobile breakout from a squeeze. Pocket pivots, kahunas. Interestingly, it does not yet have a John person buy signal. Move from Bitcoin, let's take a look at the US dollar. We've looked at it a couple times. I know that. I'm all about the market and the industry groups more than the stocks. And the dollar we can see is pulling back. Not going to bother looking at VIX. It's dead. It's flat. Gold might pop with a weak dollar, and it broke above the 200. It's had a nice move here off the bottom. Probably a lot less risky to buy it here. The other thing I like about the gold chart is this. Where gold has come down, person market catcher of relative strength has gone up. This is a bullish convergence. It suggests to me that gold may have room to run. Gold also is in the middle of a high close doji run, which is also a very bullish thing. Silver also looks interesting here. Still got overhead resistance with the 50 and the 200. And lastly, gold miners. Again, gold, the metal, is leading. Now, so I look at this. How do I feel about the market? I think you know how I feel. I think the market likely goes higher, but we're getting areas of increasing risk, and therefore I put on hedges, so reducing my risk of pulling back. And I've gotten my returns over 200% last year, over 50% so far this year, including putting on lots of hedges to protect my my money. Go to number 7, which is industry groups, hit warehouse. Let's look at top force 2 up. We're down to 46. We were at 90 last week. Last week we had nothing to the downside, and right now I got 30 to the downside. Biotech, renewable energy, specialty pharma, healthcare supplies, all groups that at least short-term moved down on Friday. Many of those are growth stock groups that are leading, and you could see, even though these are down on Friday, many of them were up on the week, including things like healthcare supplies that were up 7%, specialty pharma 3%, and 5% on renewable energy and 2.45 on biotech. But this is a very short-term divider of winning and losing groups. Let's make sure we do by raw combo. Right-click on precious metals, left-click on change industry groups. 2 above that I like. Both of these, Numark Mining. If I had to pick one, this looks a lot like GDX. It has got to get above its wrong program. It's chandelier stop, and it's 50, and it's 200, and it's 100 moving averages. So there's a road it's got to get above, but it's got the bullish convergence. It's got a pocket pivot. It's got a kahuna. It's in a John person buy. The reason why the weekly bond goes red is because it's in a downtrend. So Numark Mining looks okay if you want to be in the gold, and American Barracks looks very similar. One that looked probably the best, well, tech, I don't know if I call this a gold stock or an ore stock or a multiple different commodity stock. I own the stock. I know the stock well. It has a lot of different things. It's made some acquisitions. And is it about to break out? I don't know, but it had a nice move on this week, breaking out here. Bongos are good. The day to buy was here when it took out its 50, then it retested. Look at the earnings per share growth over here versus its multiple. I like stocks that look like that. I like tech. It's just a little loose in the chart pattern. And then another one that looks viable right here is Wheaton Products. It took out its 200. Why do I like this one better? Everything is green up here on the bongos. It's coming out of a squeeze. It's taken out the 200, the PSAR dot. It's chandelier stop. It's above all the moving averages. It's John Person buy, pocket pivots, kahunas, and then what I was talking about before, we make it color you can actually see, despite the fact that you got lower highs, you got improvement in relative strength, so bullish convergence. I see this one as maybe more buyable than this one, only because these have a lot of room just to get back to the 200. Long term, I like Newmont and Barracks. I just think that that Wheaton thing looks interesting here as well. Second group down is oil exploration and production. This is a small stock, a Reddit play. Whenever you see that many shares traded, 22 million, this pattern here, and then it comes back down, I usually run away. Option premium is too fat. It's hard to make money in options. And this is not a long-term winning pattern. You can see 88 million shares were traded on Friday. It had a run up. You know, maybe it's going to take another run. I'll let somebody else make all that money. Too hard. My wife, I don't want my life that difficult. Now, I don't know what to tell you on these energy plays. They've run a long way. Look at the earnings per share growth. You probably need to have a couple in your portfolio. I do. This is Cabot. Antero, we talked about last week, broke out. EQT, I think this is in Pennsylvania Shale, breaking out. Range Resources breaking out. Even the index is breaking out. Again, I think you need to own one or two of them. Be careful with them. Look, if you can get dividend plays, that's even better. I just think they look very tasty right here. Now, OPEC is meeting this week, and if they open the floodgates, take back what I said, because they'll only be strong if OPEC is under control. Next group down is application software, and this guy was a big champ on Friday, MongoDB, breaking out on earnings, Bible gap up. You know, you look at this stock, and, you know, you could potentially play this. The problem is it's such a long range, I can't play this. Playing a Bible gap and setting your stop above the gap point is great, but your stop would be at 450 and you'd be buying it over 500. Too much risk for me. What a move. Can't be in everything. What a move. One of my favorites of the week is DocuSign. So Silver Wheaton is one, or Wheaton Products now. DocuSign is number two. This is an expensive stock. Earnings are out, and it doesn't make money or much money. You can see revenue has been steadily growing. And why do I like this? Let me make this bigger. I like this. Let me count the ways. We have a stock that was clearly an uptrend, has gone sideways and pulled back some, and now looks like it's breaking out on the weekly. On the daily on Friday, I got a daily bongo turn green, weekly bongo's green. I have a mobile breakout from the squeeze. I took out my chandelier stop. I'm above the moving averages. My industry group is strong. I'm in a John Person buy. I've got a pocket pivot and a kahuna. I like this one a lot. I wish it had more earnings per share growth. This is not going to be a simple trade. And the reason I say that, let me get the right thing up. It closed at 310. The low was at 295. That's 5% in there. The 50 is at what? 293. I'm probably going to have a stop at about 292. My buy point is going to be about 310 and a quarter. It's about $18. That's a 6% stop. That's a big stop limit, but this one looks tasty to me. What is the chandelier at, out of curiosity? Because I could just cheat and use that. Oh, I got to find it. It's at 287. I'll probably go, you know, that's a safe stop there. I think you can go right below the 50 because if it breaks below the 50, you don't want to be in it. But I like DocuSign. That's one of my favorites. This is it's got to be, even with Amazon, my best holding. I bought this thing back here in some options. It's had just a hell of a run. I own the shares. I keep wanting to take profits, and then I'm saying, why bother? I will take it eventually. It started off as an application. Now it's more like a Amazon of non-China Southeast Asia, although I'm sure they do some China business, but it doesn't get affected as much by the China regulators. What a beautiful stock. Would I buy it here? No, way overextended. Digital Turbine. Now, I had a dialogue on the board, and somebody asked me last week, would I buy it here? I have some out of the money calls because they were in the money, and when it got trashed, they became out of the money that are now at the money again. Is this a long-term reversal here? It could be. A week ago, it did not give me that signal. Now I've got a weekly buy signal that I didn't have before. I still got a break above this resistance here. I still probably have some overhead supply risk. But does this look like it could go higher? Yes, but I'd rather wait till it breaks out above this muck in here. Digital Turbine. Salesforce I own, probably setting up to give you another buy opportunity. PagerDuty is similar to MongoDB in pattern with a big Bible gap up on earnings, but it closed at the bottom. I don't like that. I'd probably watch that and see what it does. Anaplan broke up, and now it's running again. This one is more interesting because at least it's telling me that it's not immediately dropping down and filling the gap. This was an earnings move there, a Bible gap up. And I can keep my stop kind of here underneath the bottom of the Bible gap up day. Workday, I bought this one before up here when it took out a chandelier. Why? Because of all my reasons. Weekly bongo, or daily bongo turn red, mobile breakout from a squeeze, a new John Burson buy signal, pocket pivots, and multiple kahunas. I held it through earnings, which may have been stupid, gapped up. It looks like it's going to run again. I'm still holding my workaday. It might be an opportunity to buy it again. Guidewire, this is not what you want to see. A Bible gap up on earnings and then comes back and closes near the bottom. Doesn't mean it's dead, but that's why you don't chase these things. So those were a couple of interesting stocks. Number 4, semiconductor devices. The big winner here is Nvidia, which continues to go up. I own some. Pull back to the 8-day and a move up. I'm not buying anymore, but this thing just keeps going higher. Ambarella, from dead to back to the penthouse. I remember I was in Italy when I owned this stock back here, and I got out probably down here. I made a ton of money on Ambarella. It's one of the stocks I use during my teaching, and so it was 120 bucks. And it was tied to GoPro, and then GoPro was not so novel anymore. And it came down eventually in the 30s. And then all of a sudden, it got involved in other stuff, and guess what? We're back to those highs again and took those highs out. I guess you shouldn't develop an attitude of, I'll never buy this thing again, because this proved those people wrong. And look how it was sideways for such a long time. Nope, I don't own it anymore. I wish I did. AMD might be a good buy point or a place to put a stop above perhaps the chandelier and see if it moves up. Broadcom had good earnings, really didn't do much, traded up and came right back down. Just looks like, except for a few stocks, a tired-looking market. Semiconductor manufacturing, Taiwan Semiconductor put a price increase in and got the price to go up. They make a lot of the automotive chips like NXPI. That's probably a bullish place to be. It's just been going sideways forever. Maybe it's breaking out here. This is one we talked about before it broke out, or at least I had on my list, United Microelectronics. It's broken out already. Lamb Research looks like it's setting up to buy again, but do you really want to buy a $600 stock? Applied Materials, similar. Don't buy it until it moves. Set a buy stop above it. Notice the price on so many of these stocks. It's like companies decided it's bad to do splits. When I look at so many stocks that look good, and they're $400, $500, $600, it makes me a sense that we need a big market correction just to bring these things down to a place where people can actually buy them. But in the old days, they just kept doing splits. I don't get it. Why aren't we seeing more splits? ASML, what a performer. 380 on the left, about a year ago, to 874. Holy shamoly. What a winner. How much can you buy? It's 840 bucks. It's a leader. Too far gone. KLA 10 core, 330 bucks. I just think the prices are, we need to reset the numbers, and you can do that with a bear market, or you can do that sort of with some splits. I think the market needs some splits. Cameco, uranium, how far is it going to go? It broke out nicely. I saw this. I didn't chase it because I thought here it was too far gone. This looks like a spinning top. Maybe it's going to come back to earth. Cameco is running. Alcoa, what a beautiful move. Pullback, breakout, recent highs. Awesome earnings per share growth. Here's another uranium play, UUUU. It looks like it's running out of steam, closing below the open on Friday. Automobiles, NIO, well below its moving averages. It had some, decent numbers. I don't get excited by stocks in the lower right-hand part of their chart. And the NIU, Tesla, I've had a number of buy signals of Tesla as late. Still looks interesting. Another expensive stock. 8, infrastructure software. Here's what I'm talking about. ServiceNow, 667, running. My neighbor has been in it for a long time. I hope she still has it because it's amazing. Could have bought it back in June for $450. Wowzer. But it's expensive. Why aren't we seeing splits? Elastic. This one broke out this week. I want to see stocks I can buy today. CrowdStrike I own. Had decent earnings and came back down to earth. They have some great ads about preventing hacking. Palo Alto, another security Fortinet. Beautiful runs. I'm looking for stocks that are buyable today. Don't see a lot of those, do I? Other financial services. So Marathon, this one, Riot, we talked about back here. This one would have been a better one to have bought. Riot's gone up, but not nearly as much. Of course, I bought Riot. Pullback, breakout. Would I buy it here? Well, Bitcoin keeps going higher. It's going to go higher too. I like buying these things on pullbacks and then breakouts. Number 10, internet-based services. Nutanix, no earnings, some revenue, communication services, big breakout, 6 million shares traded versus 1 normal. This must have been an earnings over here, and it keeps going. This is interesting because when it kept going after the Bible gap up, that's when I might do a little bit of look-see at. Match.com, Spotify, they're all below the 200. Coupa, Zscaler, this one is great. You want to buy it over here or buy it over here. Do you want to buy it here before earnings? Maybe it's a great buy, but not for me. Shopify, this is the other. Right now, Wheaton, DocuSign, Shopify sitting right at the chandelier stop. Mobile breakout from a squeeze, sitting right on the 50. I got my support at the 50 where I put my stop just below it. I think this one looks compelling. So that's 10. Let me show you the stocks that looked interesting to me and see if there's anything that I would want to go into more detail. Now, before I put the list up, it is a watch list. It is not a buying list, okay? If I buy one or two of these this week, that's probably as much as I'm going to buy. These are not necessarily leaders, because the leaders that are too far gone, I'm not chasing. It may not be the best stocks to buy because I may already have a position in something and it didn't, and I don't want to add to it, so I didn't make the list. But this is a group of stocks that I thought were interesting. Let me check this. We're at a minute 10, so I'm going to go through them very quickly, and then there's one more that is on my I'm very interested in buying list. So let me just open these up. Deere & Company, infrastructure play, about to break out to all-time highs or recent highs. I'd rather pick it up on the pullback, but this is one I want to watch because it could be a big winner when we do the infrastructure bill. Now, when I say watch, it means they go into a radar screen with indicators here to alert me when things change. Or maybe they go into a, hold on, let me stop this for a second, or into a market watch screen, again with indicators to show me what's going on. I don't look at all their charts all day long. So Deere Company, not yet, but a pullback, I'd be interested. Anaplan, we already looked at. DocuSign, I already looked at, told you I liked it and why. Workaday, already looked at. This is that UUU, probably not the best, but one I wanted to watch. Here is a cheap biosciences stock that's jumping off the bottom. Bongos are good, mobile breakout from a squeeze, a new person buy signal took off its chandelier stop, person, pocket pivot, kahuna, improvement in relative strength at the bottom. This one looks interesting. I don't know anything about it except it's a lab-based company. They don't have a commercial story, and it's a young company. You can see the IPO is back here last year. Don't know anything about it. I just like the chart formation of breaking out after that base. Buy in tech, not yet, but if I could get this to pull back to the 50 and bounce, which could be 2 days away, or if it bounces from here, I might be interested in it. Moderna, I covered my short call position, big profit, and now I'm ready to buy it again if it takes out its chandelier stop. Why am I ready to buy it? Because it pulled back, it did a nice base, and it looks like it's breaking out. Do I think its market cap is obscene at 168 billion? Yeah, it's obscene, but it hasn't seemed to stop the market yet, and I hate to say it, I might consider it. I think when we add in booster shots and they get more information about what they're doing outside oncology, why not? Caesars Entertainment, I already own Penn, so I may not buy it, but this one broke out as well. Pull back. I like this formation. Give me some momentum, a kahuna, a pocket pivot, and I might be interesting again. Look at the improvement in relative strength. Finance of America, this looks like crap. Why did it make it to my list? It made it to my list. It's got earnings per share growth. It's got revenue. It's got a little bit of a base here, and it had some momentum come in on Friday. I'm not buying this piece. I'm going to watch it and maybe convince myself to buy some. But right now, it's more to watch. Square, I own some of this already. Pull back here. It's got a break above the chandelier, the PSA or stop, but it might be a place to add to it. Here is a Japanese bank. Bongos turned green. I broke above my moving averages. It did. Had a kahuna. Pays a 4.5% dividend. Generac, what can I say? I know I sound like a jerk when I keep telling you I gave it to you at $100, but I know people bought it because I keep getting comments. I'm still in it, and I'm loving it. 460. When is this thing going to stop? 450 rather. Who knows? Earnings per share are okay. Its multiple is big. doesn't pay a dividend, but it just goes higher with every catastrophe that we get: fires, flooding, hurricanes. Here is a MLP, doesn't pay a dividend, interestingly, but it's just broken out, which is Antero Resources, AR. Here's now, as I said, look at the energy companies and buy one. Cinerex, Range, both look the same, both look interesting. Fourth most compelling stock to me this week was Home Depot. Now, first I got to convince myself that it's going to break out. Well, how am I going to do that? Simple. Math. The chandelier stop is sitting at 332.35. The PSAR dot is sitting at 333.50. So it's got to get above 3, and it closed at 330.34. I guess I'd like to see it get above 333.50 to get me involved, which is $1.40 higher than where it is right now. And then my stop is going to go, what's this close? 323. My stop's probably going to go right below this one. Although I could certainly argue to put my stop a little bit higher. It's got to clear this. I like the pullback, sideways move, mobile breakout from the squeeze on Thursday, strong close on Friday, and a weak tape. I like this one as well. Shopify, DocuSign, Silver Wheaton, and Home Depot. Tractor Supply, like that one. Moody's, boring company, ratings company, sideways move here. If it breaks out from here, you want to buy it when it's doing this. You want to hold it when it's doing this. If it looks like it's breaking out, you want to be in it. Don't know anything about this company. It's under a lot of demand. Had a Bible gap up, and then another strong day on Friday. It's that sucker pattern. But I'll buy it off the space. This is something that looks interesting. Do your own research. It's not without risk. Oracle, big move up, sideways move, looking for it to rekindle. You got some PSAR dot above it. It's a watch list. I don't like that one. Shopify, already showed it to you. Unity Software, it's probably too late to buy. I think this someday will be a monster stock. I'm looking for pullbacks. Bitcoin, we already said. Coinbase. It's been referred to as the Schwab for Bitcoin. Wouldn't it be nice if you had a broker for Bitcoin like you do for stocks and don't have to have wallets and things like that? This is, it's a deep base, really sold off after its IPO. I think you might want to have a position building in this, and this is still probably early for Coinbase. Think of all the people that bought it at 374. Antero Midstream, AM, look at this guy. 10.5% dividend in energy in a good stock chart pattern. Talked about Newmont, showed you tech, showed you Wheaton. Here's a REIT apartment, AIRC. I guess they think they're going to get paid now because people can't not pay their rent. Breaking out, sideways move, 2.5% dividend. Tangiers, technically it's in a downtrend, but its relative strength is getting better, and I got lots of blue on the right-hand corner. Break above the 50, I think will be looking interesting, a 3% dividend. AMD, I showed you already. Nvidia, I showed you. Applied Materials, I showed you. And that's the list of stocks that I'm going to follow on Tuesday morning when I'm not in services. And there's no reason I have to buy anything. I've got enough stocks already. But if stocks that meet my criteria hit them, I will go and I will add to my portfolio. Now, the other thing that I do during the week is I run not just my radar screens, But every day I'll update my list by running a bunch of my scans. And I thought I updated this. All right. Of course, I had a problem with my. All right. Thought I imported the scans. Well, I'll import them now. I run my scans on a regular basis, and I find opportunities for my scans here. And if you have Thinkorswim, the same thing with their scanner. And one of my favorite things is I just scan for your weekly bongo buy is yes. Your daily bongo buy turn yes within the last 2 days. And then I have a bunch of different momentum indicators that I hit scan. We'll see if it works on the weekend. And I think I'll get about 35 stocks that are in an uptrend, had a short-term pullback, and then had one of my momentum indicators on Friday. And I'm doing this during the day, looking for stocks that are popping out that have momentum. The reason you see this custom expression is I got other windows open and I'm using up all my allotted radar screen or market watch. And so these are the types of stocks that I'll be looking at. Again, uptrends with a momentum indicator after a pullback. On that note, I'm going to say good night, goodbye. I guess it's not good night, it's early in the day. Have a safe week for my Jewish brothers out there and sisters. Shana Tova. Have a happy New Year, safe New Year, and we'll talk to you all next week. And then just lastly, for the two of you that are probably still watching this, do me a favor. If you like this, hit this. If you don't, I won't come and shoot you, but you can hit that. Make comments. I'd love to get more than the viewers that I have for the simple reason this is a lot of work, and you know, one could. I'm not even going to speculate. Goodbye, everybody. Have a great week.